For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. This year, Palantir has emerged as one of the hottest stocks on the market. Its stock price has skyrocketed by more than 250% so far, driven by the company's exceptional financial performance and its recent inclusion in the prestigious Standard & Poor's 500 index. This remarkable rally has sparked significant interest among investors, leaving many wondering whether the stock remains an attractive investment option or if it has reached its peak. Let's delve deeper into the reasons behind Palantir's impressive growth and evaluate whether it is still a buy after its massive gains this year. Palantir has solidified its position as a leading global player in data aggregation and analytics, especially through its work with the United States government. Its technology has been integral in tackling mission-critical issues such as counterterrorism efforts and tracking the spread of public health crises like COVID-19. These high-stakes applications underscore the reliability and importance of Palantir's offerings. While Palantir's historical strength lies in its government contracts, the company's artificial intelligence platform has unlocked new opportunities in the commercial sector. This expansion is one of the primary reasons for investors' bullish sentiment. The platform's versatility allows organizations across various industries to leverage artificial intelligence for tasks ranging from predictive analytics to operational efficiency improvements. In recent quarters, Palantir's growth in the US commercial market has been particularly noteworthy. Last quarter, its US commercial revenue surged by an impressive 54%, reaching $179 million. This growth underscores the increasing adoption of its artificial intelligence solutions, which continue to attract a growing number of clients. Palantir's US commercial customer base expanded by 77% year over year, a significant achievement highlighting the company's ability to penetrate new markets and broaden its customer network. Moreover, the total value of its contracts increased by 37% to nearly $300 million, further emphasizing its expanding footprint in the commercial sector. In addition to its success in the commercial sector, Palantir has been deepening its ties with the US government, its largest and most long-standing customer. Revenue from the US government climbed by 40% last quarter, reaching $320 million. This robust growth indicates that the government is not only maintaining its reliance on Palantir's technology, but is also embracing its artificial intelligence solutions. Palantir has noted that various branches of the government, including the White House, Congress, defense departments, and intelligence agencies, are increasingly exploring the potential of large language models. These models, powered by artificial intelligence, are being adopted for a variety of applications, from data interpretation to strategic decision-making. This shift demonstrates the government's growing trust in Palantir's capabilities and positions the company as a leader in this emerging technology. The most significant opportunity for Palantir lies in moving beyond initial artificial intelligence prototypes to full-scale implementation within its customer base. While the company has been successful in attracting new clients, the real potential for revenue growth lies in expanding its services within these organizations. By scaling its solutions from pilot projects to comprehensive production environments, Palantir can unlock significant additional value. Palantir's net dollar retention rate, a metric that measures how much revenue existing customers contribute over time, excluding any churn, stood at 118% last quarter. This strong figure highlights the company's ability to retain and grow its revenue from long-term clients. However, it is important to note that this metric does not include contributions from newer clients added within the past year. Many of these new customers are currently engaged in early-stage artificial intelligence prototype work, which represents a promising avenue for future growth. As Palantir transitions these clients to full-scale usage, it can significantly boost its revenue growth trajectory. Despite its impressive growth and a strong market position, Palantir's valuation has become a key point of concern. The stock currently trades at a forward price-to-sales ratio of approximately 40 times next year's analyst estimates. Even after accounting for its net cash position, the enterprise value-to-sales ratio remains high at 39 times. For context, during the peak of software-as-a-service company valuations, these companies were valued at an average enterprise value-to-sales ratio of 19.4 times while achieving revenue growth rates in the low 30% range. Palantir's revenue growth last quarter stood at 30%, which is comparable to these historical benchmarks. However, its valuation significantly exceeds the levels seen during those peak periods, raising questions about whether its current price accurately reflects its long-term growth potential. Adding to these valuation concerns is the fact that several key insiders have been selling their shares in recent months. Chief Executive Officer Alex Karp has been a consistent seller of Palantir stock in recent years, but his activity has intensified since September. Over the past few months, Karp has exercised stock options and sold more than 33 million shares, generating over $1.6 $1.6 billion in gross proceeds. Similarly, Chairman Peter Thiel sold over $1 billion worth of stock in September and early October. Other executives and insiders have also participated in significant stock sales during this period. While insider selling does not necessarily indicate a lack of confidence in the company's future, the sheer scale of these transactions has raised concerns among investors about whether insiders believe the stock's valuation has reached its peak. It is no surprise that Palantir Technologies has become a standout name in the world of artificial intelligence and data analytics, with its artificial intelligence platform earning recognition across a wide array of industries. This cutting-edge platform is renowned for its ability to streamline operations, drive revenue growth, and generate significant cost savings. Sectors such as healthcare, food services, and railway systems have reported remarkable improvements in efficiency and overall performance after adopting Palantir's innovative solutions. The company's unique approach and robust product offerings have not only garnered attention from businesses, but also impressed investors who have seen its share price experience exponential growth. However, despite the optimism surrounding Palantir's technology and market leadership, many investors are beginning to question how long this momentum in stock prices can realistically continue. The focus is shifting from Palantir's operational achievements to the challenges posed by its current valuation. One influential voice in the investment community, operating under the pseudonym Prop Notes, has publicly called for caution. Prop Notes, who is ranked among the top 2% of stock experts on the analyst platform TipRanks, has suggested that this might be an ideal time for investors to realize gains and redirect their capital to other opportunities. According to Prop Notes, the combination of a speculative frenzy around artificial intelligence and a favorable interest rate environment has driven Palantir's valuation to unsustainable heights. The seasoned investor acknowledged that Palantir will likely continue to flourish in its core markets, thanks to its superior technology and strong customer base. However, Prop Notes emphasized that the company's current valuation presents a serious concern. With a market capitalization of $140 billion, Palantir is trading at multiples that are difficult to justify. Specifically, the stock is priced at roughly 52 times its sales and an astonishing 300 times its net income. These figures far exceed industry norms and suggest that the stock is heavily overvalued. Prop Notes pointed out that while Palantir's organic results have been exceptional, no level of operational success can compensate for such a steep price tag. The investor expressed skepticism about the sustainability of these valuation levels and predicted that they would eventually contract, potentially leading to significant losses for shareholders who remain invested at these levels. Looking ahead, the outlook for Palantir's valuation remains challenging. Prop Notes noted that the company's price-to-earnings ratio is expected to stay above 100 times for at least the next 3 years, extending into 2027. This prolonged period of elevated valuation further reinforces the investor's belief that now is the right time to exit the stock, emphasizing that the current market conditions present a rare opportunity for investors to take profits before the stock undergoes a correction. Reaffirming this perspective, Prop Notes assigned a sell rating to Palantir shares. This marks a stark contrast to the bullish sentiment that has fueled the stock's rally in recent months. While Palantir has dazzled the market with its outstanding growth and innovative solutions, the broader sentiment among analysts suggests that a reality check is overdue. Currently, Palantir's stock has a consensus hold rating from analysts. This consensus is based on a mix of recommendations, with 3 analysts rating the stock as a buy, 7 as a hold, and 6 as a sell. The company's 12-month average price target stands at $33.73, which implies a potential downside of over 48% from its current trading levels. This significant gap between the current price and the average target highlights the cautious outlook many experts have regarding Palantir's near-term performance. Despite its impressive track record and strong fundamentals, Palantir now faces a critical juncture where its valuation and future growth potential must align more closely with market expectations. Investors are urged to carefully evaluate their positions and consider whether the current price level justifies the risks involved. Palantir's artificial intelligence platform has revolutionized industries like healthcare, food services, and railways, driving efficiency, revenue, and cost savings. However, concerns about the company's elevated valuation have prompted cautious advice from top investors like Prop Notes, who warn that the stock's multiples are unsustainable. With its price-to-earnings ratio projected to remain high and a consensus analyst rating of hold, Palantir may face challenges aligning its valuation with realistic growth expectations. In summary, Palantir has demonstrated exceptional growth across both government and commercial sectors, driven by its innovative artificial intelligence solutions and expanding customer base. Its strong revenue growth, particularly in the US commercial market, and its deepening relationships with government agencies highlight its potential for continued success. However, the stock's high valuation and significant insider selling activity are factors that investors must carefully consider. The decision to invest in Palantir ultimately comes down to balancing its impressive operational performance and growth potential with the risks posed by its elevated valuation. Investors should weigh these factors to determine whether the stock aligns with their risk tolerance and investment goals. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.